Hello, my name is Michael Rodriguez. I am a junior planner here at South Bay Financial Partners, and I will be discussing investment selections. The goal is to help you choose the right investments to fund your goals. So let's go ahead and get started. Just a caveat, investing involves risk. Everything we talk about is for informational purposes only and education only. Any example given are fictional and for illustration only and do not reflect what will or will not happen to you. We don't give your specific situation and aren't giving you specific advice. If you'd like that, please visit the services link in your amazing financial life. So you should have already completed the foundational steps and portfolio design. And now we are on step 3, which is investment selection. In section 3, we'll be discussing where to invest, index funds, and fee awareness. We felt this quote was apt. People say that money is not the key to happiness, but I always figured if you have enough money, you can have a key made, by Joan Rivers. We agree, money is not the key to happiness, but it does not hurt having more of it. So first we'll be starting off with where to invest. There are a variety of places to keep your assets and a variety of accounts that can support various goals. Choosing the right one can save you money, grow your portfolio more quickly, and help save you some headaches down the road. First, we'll be discussing the different types of accounts. There are investment accounts. It's where you deposit money and buy investment products, stocks, bonds, mutual funds, etc., or even earn interest. We'll go into those with a few more details later in the course. Next are bank accounts. Probably many of you have these already. They're personal accounts that are more liquid and usually cash-based. Checking accounts, savings accounts, certificates of deposits, which are called CDs, and these are usually used to pay for your day-to-day expenses. When we talk about investing, we often jump into the individual investment products and what to buy, such as stocks, bonds, mutual funds, etc. However, it's important to know there are many layers to investing that will impact your performance, particularly in terms of fees and taxes. While this is something that is often overlooked, we're going to discuss this because fees vary depending on the types of accounts and whom your accounts are based with. So we're going to start with the first decision you may make as an investor. Where do I open my investment account? These are the 4 discount brokerage houses that we believe are the best options in our opinion. There may be cheaper options, some that you feel offer more value, but these are what we have had success with and what we currently recommend to our clients. And you want to make sure to be aware of other investment products you may come across, Betterment or new products that are entering the market or brokerage houses. You do your research. If you feel that they align with your needs or goals, definitely you can always consider other options, but at the end of the day, this is what we recommend to our clients. At every layer, there are fees associated with the services provided. Brokerage houses charge fees for the services that they facilitate, similar to a bank except for investing. Here's a brief outline of 3 of the 4 choices we recommended. Previous slide. First, we'll be discussing investing in your short-term goals. Short-term goals are investments to ensure you have the money you need when you need it. These are typically very low-cost accounts. They can be you can set up as many as you need to align with your goals. Some examples are the high-yield savings account, CDs, and money market accounts that are offered at your brokerage and bank accounts. Next, we'll be discussing intermediate goals. Federal interest rate hikes have increased options for intermediate goals. T-bills are 52 weeks or less, and rates are assigned at auction. Notes are 2 to 10 years, and rates are assigned at auction as well. These can be purchased from the U.S. Treasury at treasurydirect.gov or from your brokerage account that you are using. Another great option are CDs. Currently, they are offering very attractive interest rates, and that could increase or decrease. So definitely something to keep an eye on. Next, we'll be discussing investing for long-term goals. The investment accounts you can establish are the 529 for college, the traditional IRA for retirement, the Roth IRA for retirement, and a taxable brokerage account for other goals. Some other options are the employer-sponsored investment accounts, the HSA for health expenses, which is a health savings account. There's also the 401k, the 403b, and the 457b, which are retirement accounts that you get from an employer-sponsored investment account. Just so you know, after you leave your employer, you have options to roll over these accounts to brokerages or subsequent employer and into accounts you choose. Sometimes there are restrictions, so you do need to make sure you are paying attention to that. As for investment accounts, here is a brief breakdown with what the benefits are when you do so. Next, we'll be discussing investment accounts and taxes. There are two types of investment accounts. Taxable, which would be your brokerage account, and your treasury.gov account, which are your T-bills and notes. Next, there are tax deferred or tax sheltered accounts, which would be your 529 traditional IRA, Roth IRA, your employer sponsored retirement accounts, and your employer sponsored HSA. Here's another way to organize the types of investment accounts. Just basically taxable and tax deferred or sheltered. This is important because minimizing taxes in addition to minimizing fees means more of your money is invested and compounding toward your goals. In general, tax deferred or tax sheltered accounts have more limitations. There may be income limits on who can participate, like with IRAs, or use limits, like with a 529 plan, or limited investment choices, like with a 401k. However, there are so many options within tax deferred or tax sheltered accounts that maximizing the ones aligned to your long-term goals should be a high priority. For example, your retirement goal, an employer-sponsored retirement account with a match or an IRA or combination is going to be your best option for this goal. I will be discussing the employer-sponsored investment accounts. Here's an example of what is covered and what is not covered under ERISA. And just so you're aware, ERISA is the Employee Retirement Income Securities Act, which is a federal law that sets minimum standards protection for individuals in these plans. So as you can see, the 401k is protected while the 403b and the 457b are not. When you participate in an employer-sponsored investment account, you do not get to choose brokerage house. However, if your company's plan is sponsored by one of the companies we mentioned earlier, Schwab, Fidelity, Vanguard, then you're probably in good hands. As for the 403b and the 457, these are not great plans, but these are plans usually offered for educators and public servants. But if you are in one of these plans, just make sure you're aware of the risk and maybe consider spreading your eggs out so they are not all in one basket. So for next steps, we're going to choose your type of investment account that you want to open that aligns with your goals. That can be a traditional IRA, Roth IRA, brokerage account, 529, employer-sponsored retirement account, savings account, and go ahead and open your account. Or we're going to choose one of your current investment accounts, if you have one already. We're going to evaluate the fees and take into consideration if you want to continue to invest there, if you want to start a new additional account, if you want to roll over the account into a new account. Just be aware of tax implications. You might want to take this course twice. Maybe do it once for a long-term goal like retirement, and then take the course again for a short-term goal like buying a house.